investments, but overall they provide a certain yield, the risk is diversified. Do you have examples on that?
Yeah. On this, clearly, just to give you some example, I think that the huge opportunities that we have, because we see that there are huge demand on this axis, is about flexible funds and fund of funds. That's a good way for clients to capture risk premium and also to invest in impact investing funds and private equity funds. So clearly for us, I think that through this wrapping, we can find some solutions and also addressing the yield, benefiting also from the diversification effect between the different asset classes, and also offering the opportunity to invest in impact investing funds or infrastructure.
But if you have so many layers between, it's not difficult to convince investors, they are still doing good, there is some impact, there is some social responsibility on the base of, you're on the top of the pyramid and the investments are on the bottom of the pyramid. And how do you inform investors what is happening on the bottom of the pyramid?
So clearly, yes, I think the key issue is around the investment philosophy. So we need to reinforce, if I can say, the focus on the investment philosophy. As I mentioned in my introduction, the key issue is about the reporting. And I think that one of the main challenges that we have, and what are the client requirements, is to tell stories. They need to understand the stories, they need to understand the decisions, and clearly reporting will help us. Yes, you're right, so we need to look, due to the fact that it's a fund of funds, we need to look at, in the funds, in transparency, what are the holdings, what are the expositions.
It's interesting that our perspective is that the transparency from the perspective of the social impact of reporting is actually going better than the financial transparency. Because a lot of the work, the good work that needs to get done, is frequently done by not-for-profits. And in the United States, and I think elsewhere, not-for-profit accounting rules are very different than for-profit. So we have a project that we're working on, which basically is a translation where you can walk from one set of accounts to another set of accounts. Because our view is a little bit different, and I don't know that we have a lot of confidence in our perspective, but that there are investors that are actually trying to make trade-offs between financial returns and social returns. Right now, that is very hard to do because the financial returns of some of the most active at the lower level of investments are not-for-profit organizations, that whole industry. So they're not doing, for example, there's no mark-to-market. If I'm making debt investments or even equity investments, I'm holding them in portfolio rather than as a private equity firm. The whole concept of doing mark-to-marketing, which can be a very expensive exercise, we're going to hold it for a long time. How in heaven's name is it worth the time to kind of try to figure out how to do a mark-to-marketing? So, or if you're doing a lot of volunteer activities, you're doing capacity building. Well, I need to be able to segregate the costs associated from that than the costs associated with running my investment portfolio. So we think, our conviction is that this wall of cash that people talk about being ready to invest needs this greater level of financial transparency in order to draw it into these smaller kinds of investments that are very retail, bite-sized pieces of debt. And
in the first roundtable, Japan was mentioned as a positive example because companies have to report their impact on the nature and on the externalities. Yeah. So is that something we in the West can learn from?
Well, I think that is very important, especially for the Japanese communities, because as I have already mentioned, the concept itself, when we talk about social responsible or ESG factors, is something foreign to Japanese investors, and well, they have to start from the why you have to invest into the area. Can I add one more thing? Because what I have already mentioned is what is happening in the Japanese ESG market and the changes of the investors' attitude. But the real problem here in Japan, there in Japan, is that pension funds. Well, probably only less than 10 pensions has already in the ESG investment yet. And only one on public pensions, and the others are corporate pension funds. That has the same problem. Well, they have difficulties to persuade trustees why you do the ESG investment. And well, there are not many people who can explain why you have to do that. And well, the hope for the futures for Japanese market is a little different approach. Nowadays, we are observing in the Japanese market. Last week, we have ILC conference and symposiums in Tokyo. And there are many investors and also corporate and also the auditors participating in that area. And it is very interesting because they are talking not about ESG investment, but they are talking definitely non-financial factors of the corporate, how they can, for long term, to make the corporate more sustainable, and how you judge by these factors. So it is becoming closer and closer for this type of responsible investment and non-financial factors investment. And well, it's easier for Japanese probably pension funds to approach from that way. And we can say that the ESG factors is one of the very important non-financial factors to that. So we are also starting to talk from different approaches. We don't insist that you have to do ESG investment or social investment because this is very important. And then they tend to resist to that, until they understand fully what they should do. But when we are talking about its factors, but it's a very important factor, non-financial factors, a part of the non-financial factors, which when you judge as investors to make the corporate long-term sustainability and to make the better performance as a result by investing into Japanese companies.
Gloria, Frederick mentioned this need to have stories, to tell investor stories, and do that through reporting and based on reporting. Is it something you will try to do with your investors? Can you give a glimpse on that, how you want to do that?
Yeah, we actually have a whole team of people. We have a person who is the head of impact, all of our impact tracking and reporting. We think for retail investors in particular, that's going to be absolutely critical. So we actually have a website that's set up, and one of the challenges with retail is that it's all governed by regulators. So the SEC and FINRA and everybody has to approve everything that we do. But we think that that piece of reporting will be critical. So we actually do have impact reports that will be high-level roll-up of numbers. And then every month there's a story that will be featured on the website. There will be interactive ways that investors can actually see what's going on with their money. And our goal is even to be able to offer trips that would be offered at a low cost through partnering with some of the industry groups that actually want to draw people to these particular countries. Because we actually think that the consumptive part of it is really important for retail investors in particular. So yeah, we actually have a lot of people and time dedicated to tracking and reporting on the impact side. But even on the financial side, we actually intend to have a lot of transparency, around all of the numbers and everything that we're doing. But can I just make one quick comment on something that Lenny said, which I think is actually